This is Pat Walker at MissionWinners.com, and I'm doing a video here for Ryan. And Ryan asked a very good question, and I'd like to share it. Ryan, this is for you, and we're going to rock and roll with this right here. Here's the question. I'll read this out. By the way, for all of you, I encourage you, ask questions. I'll answer them, and I'll always do it discreetly. That's all. No last names. He's a fairly new member, and this is what he says. I have a question for you. When you like a setup, and I'm reading this because this could help other people. This is the great part about what we do. Questions. Somebody else might go, gosh, that's a good question. I wish I had thought of it. So this is helping. So here we go. Question is, I have a setup on a breakout, and the stock goes up past your resistance level. Do you get in right away? What time frame are you looking at to enter a position on a breakout? Do you wait for a pullback or retest of the resistance to not get faked out? These are great questions. Excellent questions. So let's go through and look at a couple of these. And I'm going to answer it as we go through it. Here's Dropbox. All right? Dropbox. First, I always go to the weekly and or the daily chart. And what I'm really hung up on is this. I want a clean and simple pattern. I'm hung up on that. And there's a reason why. Is if we have a really precise entry spot, then we have a really precise exit spot. A lot of people talk about, you got to give it a 5 to 7% range. Hey, I ain't 7%. Gee whiz, man, you get like 9 hits in a row. Pretty soon you're in deep doo-doo. I'm not into that. I want super tight. That's why I'm extremely stringent on my chart patterns and entries. It's good above the line. It's bad below. That fast. And because we are finding really clean and simple chart patterns, everybody else sees it. And I want everybody to see it. Why? So they act on it too. I don't want to be the only Marine on the beach and nobody else is coming along with me. I want others in there too. So here we go. It's going sideways. And it breaks through here. This is the daily chart. But let's nuts and bolts this further. I always take it from a daily chart down to an hourly chart, and at times down to a 30-minute chart, and even a 10-minute chart. And I'll tell you what I'm looking for here, all right? I'm looking for volume. I'm going to go back to the hourly. I'm looking for volume. I want it pushing through a clean spot on the daily that corresponds with a clean spot on the hourly. And when it's going through there, by Jove, there's volume. That's what I look for. And that's what I'm buying right there. Do I wait for it to go up quite a ways? No. That's why I'm so hung up on really precise entry spots. I give them to you to the penny because that's what I'm looking for, that spot. And the other point is, this is the moral of the story, is if the entry's right here, we'll say the entry's $32.30, okay? I forget what the exact number is. Well, guess what? I ain't buying it at 34 bucks. Why? I could buy at 34, it could drop all the way down to 32.30, and I'm down $1.70. But the person who bought it right, they're sitting fine. And you can say, well, yeah, but then it comes right back up. Hey, that's investing through the rearview mirror. I don't know that at the time. So, what's the moral? Daily charts, hourly charts, 30-minute charts, and sometimes maybe even in a 10-minute chart. I'm looking for a clean and simple pattern with a huge volume surge. I don't want just a little volume. I want it blowing off the charts, and you can see it. It just starts to go with accompanying price move. I don't want to see a ton of volume and the stock's not moving, but you'll see both happening, which leads to another point. That's also why I don't put a ton of stocks on the key list. I don't, you get 20 limit alerts go off at the same time. It's like a Christmas tree. It's like, gosh, what am I going to do? There's too much happening. If we can keep the list smaller, it allows us to stay more focused. Another point I want to bring up for everybody is be sure that you find 2, 3, 4, 5 of them that you really like, that they're your favorites, and turn off the noise. Focus on those, all right? So am I getting in right away? When it's going through there, I'm in right away. But I do have to toss one variable out to you. If something's breaking out and the market's getting killed, I'm not buying. I'm not going to argue with the market. That's why the M comes first in mission winners, the markets. M. But if the market's decent and the stock's breaking through, and let me clarify, when I say decent, I want to quantify. It doesn't even need to be up going skyrocketing in price, just as long as it's quiet. But if the stock's lifting off with volume, hey, we're in it, and we're not waiting. We are getting close to that price. This is years ago. I used to say, people say, well, let's wait and see what it does. Let's see what it does at $34. What are you kidding me? The entry is right here around 32, not at 34. You buy it at 34, it falls down to 32, you're down $2. But the person who bought it at 32, they're fine. Meanwhile, you're down $2. So, well, it might come back. And again, I don't know if it's going to come back. So I buy right away. But there is one caveat to this rule. I call it the 5-minute rule. And if a stock is gapping up, now this isn't gapping up much, but if I have a stock that is gapping up really big, and I don't know if I can find one or not, let's go in here and see if we can chase something. Well, let's just do this one, okay? I mean, this wasn't a long base break, okay? But let's use this as an example. You've got it, well, no, we'll do it right here. Here's the longer base. Lifting off here on volume. It's the 5-minute rule. Right in here, wait 5 or 10 minutes. If you have a stock breaking out and gapping up pretty big, wait 5 to 10 minutes. It's called the 5-minute rule, and it can really save you some heartache as far as entry. Because you'd hate to buy, and right here you can see, this stock opened at 329.66 and fell all the way down to a low of 323.77. It fell almost 9 points off the open. So you wait 5 minutes, and then you can find a clean entry spot on that 5-minute chart pattern, and you're ready to go. So that's the time I'll use a 5-minute chart on big gap ups with the 5-minute rule. So Ryan, that's for you. I covered a lot there, but I hope that makes sense. I'm very, very stringent on what we look for because I hate getting whipped around. I'm telling you what, I hate it. And that's what we do. And I'm sorry if this video went a little longer, but Ryan, hey, I want to do it justice. Thank you for the question, and welcome to the team.